Check, check. I'm ready. I do. Thanks, Larry.
Hey everyone, welcome to the Insurance and Real Estate Committee's informational forum on what property owners need to know about flood insurance. This is Thursday, January 30th. I want to welcome our panel of speakers. My name is Carrie Wood. I am honored to be co-chair with Senator George Cabrera. I'll just quickly go over how this is going to work. We are going to have our panelists present. Allie is going to keep track of time. We're going to hold all questioning until the end. At the end, everyone in the audience is available to ask a question or two, and we are going to end at noon. So we do have realtors and others that we'd like to have part of this discussion and be at the roundtable for asking questions. Senator Cabrera.
Thank you, Representative Wood. Thank you all for being here. Looking forward to this panel discussion in a very timely issue, as I know you are all aware, something that has affected Connecticut and our country. So I'm very much looking forward to your ideas and to the conversation. Thank you so much, Representative Wood.
Thank you. At this point, we'll pass it over to Eric George from the Insurance Association of Connecticut. Eric.
Thank you very much, Representative Wood, Senator Cabrera, and all members of the Insurance and Real Estate Committee. I'm Eric George. I'm the president of the Insurance Association of Connecticut. And I want to thank you for convening this informational forum about what people need to know about flood insurance, because it is a very important topic. There are a few points I would like to have the folks who are listening and you to come away with. One, I want everybody to know that the Connecticut homeowners insurance market and our auto insurance market is very healthy. It is a very competitive system, and this is evidenced by the fact that our residual market has very little risk in it, meaning that the existing marketplace is handling the needs and the risks of Connecticut residents. It's important for people to know that, because it's not like that in every state. It's also important to know that in Connecticut, like everywhere, insurance is a state-regulated system, and our Department of Insurance is excellent in terms of balancing the needs of the consumer and protecting the needs of the consumer and maintaining a vibrant marketplace. So with that, it's important to recognize, and I think there's been a lot of misinformation out there about concerns that events that have occurred in California and Florida may somehow impact premiums here in Connecticut. And I need to tell you that that is not happening. You cannot risk or rate farm or rate hunt in Connecticut if you're not getting it in another state. The Connecticut Department of Insurance will not allow those rate increases. all rates have to be actuarially justified for the risks in the state that you're dealing with. So that is something that I think has been out there that people need to understand that is not so in Connecticut. And there's another term I want people to think about, and that is where it rains, it can flood. So regardless of whether you're in a designated flood zone, it's important, if you're in a flood zone, you have to have flood insurance for your mortgage. But even if you're not, no one is free from the risk of flood in this entire state. So it is paramount that people consider purchasing flood insurance either through the National Flood Insurance Program or through a private carrier, regardless if you're in floodplain. And it's much more affordable if you're not in a flood zone. So, you know, we've seen some devastating storms recently. Hurricane Helene, the number of that 500-mile swath storm in 2024, the number of gallons dropped, and this is true, 40 trillion gallons of water were dropped in that storm. And it's also important to realize that natural disasters, 90% of them involve flood and flood damage. So those are just the things I would like us to keep in mind as we have this conversation. I hope people realize that it's important to know if you're in a flood zone for your mortgage, but you should consider flood insurance even if you're not in a flood zone. And I'm going to hand it off to the next speaker. Representative Wood, if you want to, or you want me to just do it? Butch, is Butch online?
Good morning.
Butch is the Chief of Partnerships and Outreach over at FEMA. Butch, go ahead.
Good morning, Eric. Thank you for your introduction, and Representative Wood, thank you for inviting the National Flood Insurance Program to speak today. I'm going to share my PowerPoint with you. Let's make sure it works. Okay. And let's see if we can go to the actual slideshow. So I want to give kind of a brief introduction to the National Flood Insurance Program. As was mentioned, my name is Butch Conerney. I am the Chief of Partnerships and Outreach at the NFIP. I have been at FEMA 20 years, actually 21 years coming up in July. Most of it focused on the National Flood Insurance Program. I want to tell you a little bit about flooding in America. Okay. Flooding, as Eric mentioned, is America's most common and costliest natural disaster, affecting about 99% of U.S. counties between 1996 and 2022. So that means 99%. That is nearly every county in America has been touched by flooding in the last 10 to 15 years. One thing that I think Eric mentioned, but something that we talk about a lot, is that just 1 inch of water can cause $25,000 worth of damage in a home. That's when you think of floors, that's when you think of drywalls, that's when you think of cabinets, cupboards, and those kinds of things. Kitchen, that's your carpet. All of those kinds of things add up. The outside wrap around the house, whether it's siding or brick, $25,000 is the number we estimate for just 1 inch of water. And it's not just hurricanes, and that's the important thing that we try to impress nationwide. Wildfires, atmospheric rivers, severe thunderstorms, all of these things can cause significant flood events. Most homeowners and renters policies do not cover flood damage. It's a separate policy. Because of this, it leaves more and more Americans financially vulnerable. I was just down in Tennessee myself after Hurricane Helene, and it is tragic, the number of stories, and I think anybody on the panel can tell you, it is tragic when you realize, when someone comes to you and says, I didn't realize that my insurance policy specifically precludes flooding as a covered peril. Flooding continues to be a national challenge, and despite recent devastating floods, people continue to build in risky areas. I feel that way myself. I would love to live by the water, but I just realized if I was going to live by the water, or even in the presence of water, I would absolutely want to buy flood insurance. Flood damage impacts lower income and underserved communities more so than other communities as well. This map here shows where flood risk is projected to rise fastest in the United States. This is a map from 2020 to 2050. It was put together by NOAA. And if you look over on the right-hand side of the country, you'll notice that there's an awful lot of areas of dark blue there. And that's what's most concerning to us, is those areas both on the West Coast and the East Coast and the Southeast Gulf Coast, where flood risk is projected to rise. Let me talk to you a little bit about NFIP's history and mission. The National Flood Insurance Program is a federal program. It was created by Congress in 1968 to mitigate future flood loss across the country, to reduce future flood damage through enactment and enforcement of floodplain management regulations, and to provide protection to property owners from flood losses through a federal insurance policy. So our job is to educate property owners, renters, communities on their flood risks, to provide that flood insurance to people in those partner communities, to actually accelerate recovery from flood damage, to mitigate future flood losses through both floodplain management regulations, and to reduce the personal and national costs by investing in mitigation across the country to keep people safer from floods. We call it a four-legged stool. We've got four legs of the stool, the NFIP. We want to identify that flood risk. Other folks are going to talk about this as well. We're going to enforce floodplain management. We're going to mitigate flood risk, like I say, through grants and through floodplain management. And then all the leftover risk, we're going to provide the insurance for that. It's a public-private partnership between the NFIP, state, local, tribal, and territorial governments, the private insurers, and the business sector, and communities and individuals. So who needs to understand it? Well, it's government agencies, state, local, federal. It's the private sector. It's banks, it's insurance agencies, architects, engineers, professionals, surveyors, realtors, homeowners, business owners. And the NFIP, by the numbers, let's take a look at the program nationally, and then we'll take a look at it in Connecticut's case here in a second. We have 4.7 million policies nationally, covering about $1.3 trillion in assets. That's across just about 23,000 communities nationwide. In 2024, we had 86,000 claims, and we paid out $5.4 billion nationwide. Now let's take a look at Connecticut. 32,000-ish policies in force. We cover about $8 billion across Connecticut. So if we had a NOAA in the Ark level flood, that's how much we would be covering. And since 1978, that's the last time the records we were sure were really good when the program came over to FEMA. You can look and you can see that about $552 million has been spent in Connecticut over just about 30,000 claims. So flood insurance, it's property insurance covering water damage from multiple sources, heavy rains, melting snows, debt levees, dam failures. It's available to nearly all properties and participating communities, both residential and commercial. Flooding is not covered by standard homeowners. Coverage is available separately for structure and for contents. And flood insurance is available from the NFIP. And as Eric mentioned, there's also some private insurers that offer flood insurance, either as part of the standard homeowners bundle or as an additional add-on. Flood insurance works like most other insurance, and it is not dependent on a federal disaster declaration. So who should buy flood insurance? Business owners, homeowners, renters in an NFIP participating community, even if they're not in the special flood hazard area or what we call the high-risk zone. One thing to note, about 40% of our flood claims actually come from outside the high-risk zones. You can buy a variety of different bundles if you want to use the rest of the insurance parlance, but we cover up to $250,000 on a single-family home and up to $100,000 on the contents. Same thing, there is building coverage, private coverage, or personal property coverage. Each has its own deductible. And for a non-residential building, we cover up to $500,000 on the building and $500,000 on the content. So that could be equipment, that could be inventory, that could be office furniture, or whatever. So you buy it through insurance agents. You don't buy it directly from us. You buy it through insurance agents. We have about 60 participating companies in something called the Write Your Own program. Those companies sell and service the NFIP policy on our behalf. And actually, you would use Allstate as an example since it's early in the alphabet. You would actually go to your Allstate agent. You would buy your policy from that Allstate agent. You would write your check to that Allstate agent. If you have a claim, you would call your Allstate agent, and then Allstate would send us the bill after settling the claim. That's kind of how it works. We also have something called the NFIP Direct program. That's a smaller program. It's a FEMA-run program specifically for independent insurance agents across the country. Also important to remember, there's a 30-day waiting period before the policy actually becomes effective. So it's always important to tell people to go ahead and buy it now, long before hurricane season starts, because oftentimes we find people want to run out and they say, oh, the big storm is coming, want to buy a policy that's effective tomorrow. Our policy does not allow for that. There's something called group flood insurance policies. You might have heard of those. Those come after disasters. It's part of your disaster assistance package. There's a variety of rules, but I did at least just want to mention it. And it provides 3 years of coverage for the amount of the assistance you receive. So if you've heard about group flood insurance policies, the important thing to know about group flood insurance policies is if you receive one of these policies, then you actually need to obtain new flood insurance or maintain the flood insurance you have for the life of the property in order to be eligible for disaster assistance again. Let's see. Flood insurance versus disaster assistance. Let me go through this real quickly. We cover losses up to the value of the policy. So it's $250,000 policy. We cover losses up to that value. It's not a loan. You don't have to pay it back. You do have to pay a premium on it, but you do not have to pay it back because it is an insurance claim like a standard homeowner's claim. It's sold mostly by private insurance agents, but it's administered by FEMA. In 2023, the average claim payment was about $80,000 for Hurricane Ian, just for an example. Federal disaster assistance, on the other hand, is not guaranteed. It requires a presidential disaster declaration to receive that assistance, and it has to be a fairly large event, which surpasses the state's ability to actually deal with it themselves. Most federal disaster assistance comes in the form of either an interest-bearing loan or a disaster grant, and the total possible payout for home repairs is $41,000. The average is actually much lower, but the total possible payout is 41 grand. Remember, I said just 1 inch could equal 25, so that 41 will go quickly. Couple of misconceptions. I have homeowners and renters, so my property is covered. No, the fact is that most homeowners and renters does not cover damage from flooding. If my property is hit by a flood, disaster assistance is going to bail me out. No, federal disaster assistance is not a guarantee, and there is strict eligibility requirements, especially for the disaster grants. My house is on a hill. Water drains away. I'm safe. Well, we always say your risk could be lower, but it's not eliminated because anywhere it can rain, it can flood, as Eric mentioned before. Like I say, I was in Eastern Tennessee, very, very mountainous community. Everybody thought they were high on the hill, and it turns out that there were an awful lot of flood losses in that area. I worked in a county area. My area has never flooded, so I've got history on my side. Perhaps, but there are constantly changing conditions that can impact your flood risk. The past is not a guarantee that the future will always look so. There was a flood in my neighborhood 20 years ago, and I live in a 100-year floodplain, so nothing's going to happen in my lifetime. A 100-year floodplain is a misnomer, and I wish we would stop using it. It means, on average, that there is a 1% chance of a flood in any given year. That's what the 100-year floodplain means. It does not mean once in 100 years you're going to have a flood in this area. It means there is in any given year, there's a 1% chance you're going to have a flood. You multiply that by the length of a mortgage, and all of a sudden you realize you're looking at 20, 30, 40% chance of having a flood in a given area, and all of a sudden it becomes a lot more real.
Butch, you're running up against the end of your time. So
I've got one more slide.
okay, perfect. Thank you.
So the key takeaways: flooding can happen anywhere, anytime. The NFIP is a unique public-private partnership in which FEMA teams with industry and communities to protect Americans from flood damage by identifying those risks, educating about those risks, helping develop and enforce floodplain management regulations, mitigating flood risk through programs and grants, and selling and servicing flood insurance. Incumbent upon all of us to be flood smart by understanding our risk and knowing ways we can help protect our homes and businesses and communities. So you can look at our LinkedIn page, visit our website at floodsmart.gov, and there's an email address on there, and I will send my slides to whomever, and you guys can feel free to contact me. My email address is in those. Thanks, everyone.
Great job. Thanks, Butch. We are now going to go to Diane Ivkovic, who is the NFIP coordinator for the Connecticut Department of Energy and Environmental Protection.
Thank you very much. Good morning. Thank you for inviting me here today. And I'm glad FEMA gave you a very national overview of the program. I'm going to try to give you a more state overview of what's happening in Connecticut, because that's what we obviously care about. Even though community participation in the NFIP is voluntary, currently every community in Connecticut participates in the program. Connecticut is actually one of the few states in the nation with 100% participation in the NFIP. Connecticut communities joined the NFIP in the late 1970s and the early 1980s. Every Connecticut community has FEMA produced flood maps and locally adopted floodplain regulations or ordinances. It is important to know that every property owner in Connecticut is able to purchase a federal National Flood Insurance Program flood insurance policy. It does not matter if you live, if the property is located within the map floodplain or outside of the floodplain. If you live high on a hill or down along the shoreline, you can buy a policy through the National Flood Insurance Program in the state of Connecticut. The local community has a direct relationship with FEMA through the NFIP. While FEMA is administering the program at the national level through the production of flood maps, setting insurance rates, and providing minimum floodplain construction requirements, the community's role is the really important one, the local boots on the ground, charged with regulating floodplain development through its established zoning, permitting, inspection, and enforcement process. They are also charged with remedying violations. The Connecticut Department of Energy and Environmental Protection, or DEEP, acts as a liaison between FEMA and the local communities to help administer the program within the state. In 1977, Governor Ella Grasso, through Executive Order 18, designated the Connecticut Department of Environmental Protection, our predecessor, name change, as the state coordinating agency for administering the NFIP, along with other state programs for flood control, prevention, and protection. DEP is a resource to local communities by providing technical permitting assistance, audits, regulation reviews, and training opportunities. DEP also supports the communities that participate in the Community Rating System, or CRS. CRS is a voluntary program that rewards communities that implement activities that go beyond the minimum NFIP federal standards with flood insurance premium discount for policyholders. Connecticut currently has 14 CRS communities. DEP also coordinates with other state and federal agencies on floodplain management programs and initiatives, reviews floodplain development on state land or which is state funded, and also acts as a direct resource to residents and property owners to assist with questions on flood insurance, disaster assistance, mitigation grants, and other flood-related matters. DEP receives an annual grant from FEMA, which funds one staff position for these activities. Some of this is going to be redundant, I admit, from Butch's previous, but I'm going to do it again because it never hurts to say it twice. Flooding is the most common, costliest disaster in the United States. Flooding is defined as water entering a structure from overland flow, such as from an ocean, a watercourse, or poor street drainage. The vast majority of homeowners' policies do not cover flooding. Homeowners' policies primarily cover fire and wind damage. A separate flood insurance policy must be purchased to cover losses from flood damage. Flood insurance is available through the Federal National Flood Insurance Program or select private insurance companies that offer such coverage. Per federal law, a lender, as a condition of a mortgage, will require property owners to purchase and maintain flood insurance if the structure on the property is located within the mapped 100-year floodplain. And this is a condition for the life of the loan. This is called the mandatory purchase requirement. However, if a mortgage is paid off, the property owner can drop flood insurance coverage. If the property is located outside of that mapped floodplain, the purchase of flood insurance is optional and at the discretion of the property owner. There is a 30-day waiting period for flood insurance policies to take effect, except in the instance of when a mortgage is closing and that it is effective on the date of the closing. Butch had a very nice slide. Again, for a residential policy, you can have $250,000 of building coverage, $100,000 of contents. And for non-residential or a commercial policy, it's $500,000, both for coverage of building or contents. Building coverage includes things such as the foundation, heating, electrical, plumbing systems, anything that is integral to keeping the building intact. Contents is more people's personal belongings, such as clothing, furniture, electrical equipment, etc. Butch had this on the slide too. As of January 28th, a couple days ago, we do have about 32,000 policies in effect, National Flood Insurance Program policies, covering property worth $8.7 billion with premiums of $43 million. And since 1978, Connecticut has had over 29,000 paid losses totaling about $52 million. I would like to end by saying every property owner has the potential to be flooded. Where it rains, it can also flood. We've already heard that one. We saw this recently in the floods that devastated Western Connecticut in August of 2024. Due to the extreme intensity of that event, many of the flooded properties were outside of that mapped 100-year floodplain. A line on a flood map is not a wall, and it is not a guarantee that you will not be flooded. Storms can be larger than that 100-year flood portrayed on a map. Federal disaster assistance is only available if a flood is large enough to warrant a disaster declaration. However, flood insurance can pay a claim regardless of whether there is a disaster declaration. Please consider talking to your insurance agent about flood insurance coverage for your property. Thank you very much.
Thank you so much, Diane. So hopefully we have Don Griffin online. Don is Vice President and Project Coordinator for APCIA. Don? Can you unmute yourself, Don?
That's a good thing. I just was asking if you could hear me, so I guess the answer was no. So my apologies. Yes, my name is Don Griffin. Despite my title, I've been involved with flood insurance for about 4 decades at this point, a little over that. I learned about it when I worked in a little agency in between Houston and Galveston, and we had a hurricane come through in 1983 called Alicia that created a lot of havoc, and I learned how to spell, not only how to spell the word flood, but how to deal with the claims and all that are involved. My part of this is to talk briefly about the private market, and you've heard it referenced in a couple ways. Thanks to my esteemed colleague, Butch Kenearney. We do have a private market, and a vital one actually in Connecticut. They've written, as you heard earlier from Diane, there's about $43 million in premium, flood premiums written in the state through the NFIP. The numbers I have are the most recent ones are through the end of 23, so we don't have 2024 numbers, but it was about 19 million in the private sector. Now, I will say the key thing about that is that a lot of that is for commercial coverage as well, not just residential, because a lot of policies actually in the commercial space include flood coverage along with the primary coverage that they provide. We help as an industry, as Butch mentioned, through the Write Your Own program, be a third-party administrator for the flood insurance program. Our members, APCI's members, write about 81% of all the federal flood insurance in the country through the Write Your Own program. We also have about 82% of all the private flood business. And I will tell you that in Connecticut, there's about 20 or so write your owns that actually operate in the state and report premium in the state. But there are about 80 private flood insurance companies that provide coverage in the state. Some of them not a lot, but 80 companies that are actually writing business in the state. One of the key things I think you've heard people say is that where it rains, it can flood. I will repeat that. We need to keep repeating that. Every speaker has said it so far, and I will certainly reiterate it. One of the things I think that people don't realize is not only the limits that Butch showed are fixed, but the private industry will write excess flood. So we will come in and write coverage above the $250,000 for the homeowner and above the $500,000 for commercial risks. That is an opportunity for us as an industry to help pick up the balance when it's not enough. In many cases, as we've seen with inflation in recent days, real estate prices and replacement cost of real estate is going really high. So one of those things is that we can help with is write the excess flood. We are concerned, obviously, that still, no matter what we do and no matter how good we've tried to market this, that not enough people buy the product. We are seeing a move by some private companies to try and sweep this coverage into other policies as a way to make sure more people are covered. But at the end of the day, the true decision about whether you buy flooded coverage or not comes down to the property owner unless you're required to buy it, as you've heard, because you have a federally backed mortgage. I would encourage, as others have said, and I'll be short on my time, so hopefully somebody else can make it up. I'll be short because I hope that everybody realizes that anyone that was really glad to hear that Diane say that 100% of the state participates in the NFIP program, because that means everybody has access to it. And we need to make sure that more and more people buy it, because one of the things we found in hurricanes Milton and Helene is not enough people had the coverage, particularly in areas in Appalachia. So we need to make sure more people buy the product, because as you also heard from Butch, it's the most common, most costly disaster coverage there is. So I'll stop there. Thank you all very much for inviting me to be part of this August panel.
Thanks so much, Don. So now we are going to go to Kim Baccio from the Hartford, where she is sales director at the agency Flood Group. Kim.
Thank you, and thanks for having me here today. I appreciate the invite and the opportunity to speak with you about this really important issue. So if you could go to the slide with the map, please. I really want to start out by demonstrating this one. There we go. I really want to start out by reiterating what the other panelists have said, and that is that there is a real need for flood insurance outside of coastal. This map is available on floodsmart.gov. It is FEMA data over the past 72 years. And what this demonstrates is that in the last 72 years, there have been 902 flood disasters declared. Now, you know, at the outset, that might not sound like a lot in 72 years, but in 71 of those were in the last 5 years. This risk is increasing. And this map really only shows you where floods have been declared outside of hurricanes. If I had actually added in the hurricane data to this, that entire area, you know, Florida up to North Carolina would also be completely blue. So I can't stress to you enough how, yes, this is the nation's most common natural disaster, and nobody would buy a home and even consider not having homeowners insurance with wind coverage, fire, and yet this most common natural disaster is basically not even thought of, not even considered. And I want to reiterate, you know, what Diane said. Coverage availability is not an issue when it comes to flood, especially in the state of Connecticut. The Hartford and any participating carrier will write wherever the NFIP writes. So we're here. If you could go to the next slide. All right. So, prior to the creation of the National Flood Insurance Program in 1968, folks who suffered from flood, they really didn't have much recourse, right? And even in 1968, when the program was created, the NFIP struggled to reach homeowners, struggled to reach policyholders. So that is why in 1983, the National Flood Insurance Program partnered with private carriers known as Write Your Own Carriers, WIO for short. And that partnership with FEMA began in 1983 so that we could reach more homeowners, educate more people, make them aware of their risk. So what private insurance carriers do is we sign an annual arrangement with FEMA that allows us to write and service policies in our own names. So we can write it as a companion to your homeowner's policy. But even the Hartford will write your flood policy, even if you don't have home with us. So it's very available. So FEMA uses insurance companies as fiscal agents to help it carry out the NFIP via this arrangement. And the arrangement outlines the roles and responsibility of the company. One of the primary things that I want you to take away from this is that while as the carrier, we do adjust and pay those losses, you'll get a check from, the Hartford. The funds to pay those losses are US Treasury dollars. The carrier actually has no financial burden when claims are paid. Our exposure is reputational. So, what we try to do is make sure we meet coverage gaps. Our role, our goal as an insurance carrier is to provide you with coverage solutions, not leave you with coverage gaps. So the carriers, like the Hartford, we are paid a fee based on premiums collected and claims paid. So that's how we, take care of our overhead, pay our agents who write these policies for us. So if you could go to the next slide. I just want to talk a bit about the partnership, which, Butch did talk about, Don also talked about. So the goals of the program are shared, and it is primarily to reduce suffering after flooding. It's needless suffering. The availability there is there. Our shared goals with FEMA help ensure that more people have access to reliable flood insurance, improving community resilience and recovery after flood events. So our goal, we want to get more people and businesses covered. We want to improve the policyholder experience. That's something that private carriers are really good at, that the government needs our help with, to make this a really great program for policyholders. And then there's a knowledge sharing between FEMA and the private industry that allows us to help each other get better, find more ways to help policyholders. We are one of, I don't know, the numbers are a bit different here as far as the number of carriers in the program, but the important thing is, there's over 3.4 billion in premium for over 4 million properties that are just through the carrier side, the WIO side of this program. In contrast, the NFIP Direct program writes 536 million in premium for 588,000 properties. So the message I really want you to take away from that is that private carriers and the agents who represent us have relationships with policyholders that allow us to grow the program in ways that FEMA can't do on their own. So we're really important here. You could go to the next slide. So I just wanted to share with you a quote from one of our, from a really active flood insurance agent in Houston, Texas. And he says, what motivates me to sell flood insurance is when something really bad happens and someone does have a claim, I can go to them and say, this is the reason why we put these policies in place. It's okay. Let's start the claims process. So what we strive to do as a carrier, we empower agents to sell flood insurance because, again, we recognize that agent policyholder relationship, it's one of trust. So we really look to the agents to help us sell this program because we have a direct program ourselves as the Hartford. You can buy flood insurance directly from the Hartford. You don't need to go through an agent. However, 95% of our flood book is through agents. And we have 330 agencies in the state of Connecticut that help us write flood insurance. So consumers, you know, a lot of them are comfortable buying direct, especially when it comes to auto insurance. But when it comes to homeowners, consumers often prefer to buy home from a trusted agent. It is almost always your largest asset. So what we do is really strive to support those agents, make it easy for them to sell flood insurance. Flood insurance is quick and easy to quote. It typically takes less than 10 minutes. There's no shopping around. The NFIP premiums are the same across all companies. It addresses an important coverage gap. So that's really why, you know, agents want to sell this. We want to reduce disaster suffering for communities, and agents want to do that too. These are their neighbors, their friends. And it protects the agent from errors and emissions exposure, because, you know, it's one of those things where if you don't tell someone that they are not covered for something, or you don't give them enough coverage, that puts the agent in jeopardy. Another important reason why, you know, we need to work with the independent agent. So if you go to the next slide. So I just want to reiterate about, you know, this partnership. We've been in the program since around 1986. We have approximately 15,000 agencies across the country that participate with us in the flood program. And again, 330 of those are Connecticut domiciled. Being independent agencies, they often work with more than one carrier. But again, since all the carriers have to charge the same rate and offer the same coverage, we differentiate ourselves based on service, technology, and claims handling. So if you can go to the next slide. I'm not going to spend a lot of time on this one because it is just a quick coverage guide. And I know that we've already had a couple of speakers, you know, talk about the coverage limits that are available for both building and contents. But what I do want to share with you is that, you know, Butch had shared that 1 inch of water is, you know, 25,000 in damage. He shared the stats from Ian, you know, the average claim being $78,000. If you are not in a high flood risk area, a special flood hazard area, okay, and you don't have a mortgage and flood insurance is optional, you can customize this policy to meet your needs. If you don't want to take the full $250,000 worth of coverage, you don't have to. If you wanted to say, hey, you know what? Average is about, you know, 78,000. You know, I'm not in Florida. I'm up in the Litchfield Hills. Let me just take a little bit for my first floor. And if you wanted to take 25,000 of coverage, 50,000 of coverage, customize your deductibles, you know, take a different limit for contents coverage. It's a very customizable policy. Next slide. I just wanted to share some samples of how we work with agents to promote marketing and outreach to policyholders and you know, any consumer out there. You know, there's some social media ads that we've got that agents can use to go out and find more, you know, educate people. If you go to the next slide. This is how you can get flood insurance with the Hartford. Directly, even if you don't work with an agent. Now, like I said, most people prefer to work with an agent, but we look to cater to the buying preference of the consumer. So we do have a direct program for those buyers who prefer to work without an agent. And all you have to do is go to thehartford.com. You go to our home insurance section, click the drop down for flood, and you can get a quote right online, less than 10 minutes. And if you like that price, you can even purchase it, pay for it online and get covered. And again, you do not have to have your homeowner's policy with the Hartford to purchase flood. We do take all comers. So if you can go to the next slide. This is one of the ways that it's not the prettiest thing, but someone was kind enough to take a picture for me of their homeowners renewal packet with the Hartford. And this is just one of the many ways that we really put in front of our policyholders. Your homeowner's policy does not cover you for flood. So you can see here, did you know flood damage, including storm surge, is not covered by a homeowner's policy? The Hartford offers flood coverage through the NFIP, fully backed by the federal government, and we give them our flood hotline so that they can call, learn more. So if you go to the next slide. So I just wanted to close up with talking about how Connecticut flood policies are primarily coastal. So you can look here and see, you know, we got New Haven County, Fairfield County, Middlesex, you know, where you would really expect, right? Because people think about flood as a coastal exposure. But the reason I started my presentation with that map showing you where all that flooding occurs and all that blue right in the middle of the country is because it does not matter. Where it rains, it can flood. We saw that in August in Connecticut, Litchfield Hills. Who would have thought, right? So you have to be aware of hidden flood risks and understand that where it rains, it can flood. And it's not just from, you know, Mother Nature, weather events. Sure, you know, that's where the rain comes from, but there are hidden flood risks outside of nature. I'm talking construction projects, surface erosion, natural events like fire. Unfortunately, you know, what's going to happen in California after the wildfire is flood. Flood happens after fire because the ground is scarred and it can no longer absorb the water. You get mudslides, you get floods. So it's things like fire that lead to flood as well. Inadequate drainage systems. And of course, you know, we're all familiar with the rainfall and the snow melt. But, you know, I really wanted to drive home the point here and end on saying that we've got a real coverage gap in Connecticut. I think someone said it was 39,000 policies. I don't know how many homeowners we have in Connecticut, but you know, how many homeowners, renters, everyone's exposed. And everyone can get flood insurance. So I'm going to end there. Thank you.
Thank you so much, Kim. A lot of conversation there about the agents, so perfect timing to hear from Travis Waddy, who is the Assistant Vice President for GR, Government Relations, over at the Big I Connecticut, which are the independent agents. Travis.
Thank you, Eric. So to begin, thank you to the committee for bringing together stakeholders and leaders on this important topic with respect to flood insurance in the marketplace and its impact on Connecticut property owners. My name is Travis Waddy. I'm AVP for Government Relations at the Independent Insurance Agents and Brokers of Connecticut, also known as the Big I, and we represent over 150 individual independent insurance agent and broker locations across the state of Connecticut, and also are celebrating our 125th anniversary this year. I'm joined today by Jason Guerrera, partner and senior vice president at USI Insurance Services in Glastonbury. He's also vice chair of the Big I Connecticut Board of Directors. Before turning it over to Jason, I just want to give a picture of who insurance agents are. And Kim, you nailed it. I feel like you were looking at my notes before, just crushed it in terms of the importance of the agent and the role that they play in the communities that they serve. So it's rare that your insurance agent is a nameless or faceless person in an office far, far away. They are most often the people who are in your community, dedicated, vocal, visible community members. They're small business owners, their employers, they're sponsoring all the youth sports teams and the community fundraisers. So I share this because their commitment is second to none. They work with the people that they're looking to protect. Their kids go to the same schools, they go to the same parks, enjoy the same community services. So their investment in the community and their commitment and investment to serving and protecting their customers and making sure that their customers understand their risk profile and understand the insurance solutions that are available to them is their top priority. It's their home, it's their community that they're helping to protect. Jason is on the front lines of that every single day, and a fantastic person who can share some perspective around his interactions with customers, particularly and specifically on the flood insurance topics. Jason?
Thank you, Travis. You know, as a broker, really our role is to be an advisor and consultant with each and every one of our clients. It's very important to us that we work with each individual homeowner, business owner, town officials to understand each individual's cost of risk. When the insurance space, a term we use a lot is your total cost of risk, or TCOR. And when we sit down with a homeowner, you know, just going to give you a high level of what that process looks like. So when we sit down with a homeowner and we look to get them quotes for their home, their auto, you know, some of the other properties that they may have, what that process looks like is we'll have a sit down conversation and walk through, all right, how many cars do you have? What kind of homes do you know, where's your home located? Do you have any dogs? Do you take trips overseas? And so our sense with working with each individual client is to really understand what each person's exposures are. And it's our job to make sure that we put together and advise them of all the exposures they may have for each of the risks they may face. And for each person, it may be a little bit different. And the component to that is, and Travis had mentioned this too, in terms of the education piece. You know, one of the things too that some of the other speakers touched on is that part of our job as brokers, as well as in consulting with these homeowners, is advising them and educating them on what those risks are. So I know there's a lot of statistics thrown around about to talk about 1% chance of flood amounting to 20% chance over a 30-year mortgage. Around 40% of flood claims occur outside of a flood zone. And so these, in terms of when we work with clients, you know, it's our job to educate them to make sure they truly understand the scope and nature of the risks that they may face. But ultimately, it's a risk financing decision. And so when we work with a lot of homeowners, despite all the education that they may provide, many homeowners often say, you know what, an average flood policy, if you buy the max $250,000 for a single home, average cost of a flood policy is I would say between $600 and $800 a year. And that's if you're not in a flood zone. So the costs in a flood zone could be a bit higher. And you're talking the average cost of a homeowner's policy is around that same amount too. So basically what you're asking these homeowners to do is effectively double their insurance costs. And this is in an environment with 7% plus mortgage rates, price of eggs, and increase of other supplies that really impact homeowners' decisions to buy this insurance, because ultimately most of them cannot afford it. Now, another speaker had mentioned too, you know, one of the options we suggest as well, maybe you don't buy the full 250, maybe you buy 50 or 100. But in most cases, you know, some of the other myths that were on the presentation earlier, a lot of folks, if they're not in a flood zone, if they're high on a hill, if they're in the Litchfield Hills, I know I grew up in Thomaston, they just simply don't, they make a business decision to say, you know what, based on the cost, they just either can't afford it or they just don't see the value. And I would say, you know, I'm not sure exactly what the statistics are in terms of the percentage of homeowners that actually buy flood. I would say it's fairly low. I would estimate between 10 and 20% of homeowners buy flood insurance. Yeah, and I would think that's being generous. So, you know, and the role of the insurance agent is really important, you know, in terms of the education piece. But ultimately, it's a risk financing decision, and clients often, when they look at the cost of flood, they choose not to. The other piece I want to touch on too as well is in terms of the agent education, not just the client education, but as agents, right? We're a licensed position. And so as part of that, we take ongoing continuing education classes. And so every 2 years, we have to accumulate 24 credit hours of education. And we have to do that every 2 years before renewing our license. And additionally, NFIP also offers a 2-part key fundamentals of flood insurance course. I took mine because my license renews next month. So that is something that is out there that agents and brokers are utilizing and as part of the agent education process. So Travis.
Thank you, Jason. just one last thing I wanted to share a little perspective on, and we want to certainly respect the legislative process. And there have been some ideas that have been out there in the public around how do we get at this. And um, one suggestion, which again we'll wait for more details, but suggests an affirmative type declination from customers as they are securing either a mortgage or securing their insurance. Again, we'll wait for the details on that, but I just want to offer a word of caution around ideas that may, seemingly a simple check of a box or a simple signature from a customer seems basic enough, but there are always generally unintended consequences, challenges that may arise from these types of requirements, mandates on small business owners. Kim mentioned E&O and insurance and exposure there that may drive premiums for customers, or excuse me, for agents. And then also just some recent experience in the state of New York with something similar. The details were different, but an affirmative declination required for an auto policy that really wreaked havoc to the point where legislators quickly came back because they were inundated with angry constituent phone calls. And so we will wait for the details and look forward to sharing additional perspective on any and all proposals around how we can help educate customers on flood insurance and get them the protection risk that they need. But again, just a word of caution, and happy to dig into that a little bit more in the Q&A period. But finally, just back to the agent and their commitment to the communities that they serve. It is in their interest every day to make sure that their customers and their neighbors, their family members, their friends are adequately protected from all the risks that are present to them. So thank you.
Thank you, Travis and Jason. So now we're going to go to my good friend, George Bradner, who is the head of property and casualty at the Connecticut Department of Insurance. George.
Thank you very much, Eric, and thank you for having me here today. Let's wait for my slides to come up for me. Okay, there we go. So I want to talk to the folks today. I hope you like my title, Earth, Wind, and Fire. I'm a big Earth, Wind, and Fire fan, but I think it's very appropriate. Next slide, please. So I'm going to be talking today about homeowners insurance in the industry overview. Reiterate, the department does not regulate NFIP flood rates, but we can help better inform consumers about flood risk and navigating flood insurance. And I can tell you it's one of Commissioner Mays's major efforts this year and going forward to try and bring better information to our website to inform consumers about the risk that is there. And you heard, everyone is, where it rains, you can flood. I want to talk about some of the events that's happened in Connecticut. We've seen earth events, we've seen wind events, and we've seen fire. And then I want to touch a little bit on the legislation. Next slide. Department has a bifurcated responsibility. We're responsible for company solvency and consumer protection. We need to make sure companies are charging adequate rates and to ensure solvency so they can pay those claims at the end of the day. Next slide. Too far. The Property Casualty Division reviews all rate, rule, and form filings made by the property casualty insurers in the state. To give you a flavor, last year, we reviewed over 1,400 filings, rate filings, and that included over 107 homeowner rate filings. Connecticut's is a competitive market rating law state. Standards for regulation, and those are the standards that personal risk insurance are measured by, and many other lines of business. Statutes rely on a competitive marketplace to establish and maintain reasonable rates. And that means rates may not be inadequate or unfairly discriminatory. Rates are based on Connecticut experience, and other states' losses are not factored into the homeowner rates, as Eric and others have mentioned. We're pretty serious about that. We do not allow outside state experience to be used in the rate setting for Connecticut. Next slide. As Eric and others indicated, from a homeowner perspective, we have over 100 companies selling homeowners insurance in Connecticut. We have a competitive marketplace. And I would point out that we are responsible for publishing a rate report every year due to the legislator, to this committee, by January 15th. And that report is out on our website, so you can look at homeowners, auto, commercial lines, rates that were filed by companies in the state, and you can see what rates were approved. Next slide. Last year, we had overall requests of 14.4% on average, and we approved 13.5% on average for the state. Last year alone, we saved consumers actually almost $35 million from what we did not approve. And since 2012, when we started measuring this, we've saved consumers over $150 million from additional rate. Next slide. One of the things we need to keep in mind, while rates are not, companies are not allowed to use their experience in other states to set rate, there are things that are happening on a national basis that we see around the country: California, LA fires, hurricanes in Florida, North Carolina. These have national consequences. They have state consequences. What happens, companies look at their experience, they look at their exposures around the country and within states. They tighten their underwriting criteria. They look at what risks they're going to write, what risks they don't want to write. It happens. I remember after Katrina, I was asked by a reporter, how is this going to impact rates in Connecticut? And I said, and I was right, it's not going to impact rates. We are going to be okay. But what we saw after that was a tightening of the marketplace because of reinsurance costs. And those are real. Those are real costs that industry has to face. And those costs make their way into rates as companies, determine what rates are going to be charged. They have companies rethink about where they're going to write business. You have companies sometimes pulling out of states because they realize that there's too much risk for them. So these are real marketplace issues that do happen. Replacement costs and labor increase. One of the things that's going to happen that impact rates, I talk about inflation and demand surge. You will see from a homeowner perspective, rebuilding or building a new home is going to have the losses in LA are going to have an impact on, building materials. There's also a labor shortage. We see about labor shortages in automobile, in the repair shops. You're seeing and we're hearing about labor shortages in the construction industry. So you have less people, skilled people to do things. So these drive up prices and drive up insurance costs that insurers have to bear when they pay claims, and costs that make their way into your rates. Next slide, please. Okay. We've seen earthquakes most recently, and in Maine and New Jersey in 2024 and DC in 2011. So we're not immune. Fortunately, we have our geology. We have much harder geology, which the impacts of the earthquakes are not as severe as California and the New Madrid fault. Nothing's happened down there, but earthquakes are a risk. We've seen flooding, historic rainfall in August in Western Connecticut. Wind, severe convective storms are happening with much greater frequency. Even greater frequency than the impacts of hurricanes. We're impacted by tornadoes, tropical storms, and hurricanes in Connecticut. It's important to note, Irene and Sandy were not hurricanes, and flooding was the largest loss by far, with many property owners uninsured. Next slide. For a small state, we have big risk. Coastal Connecticut coastal property, over 675 billion. This number is about 5 years old. So I wouldn't be surprised with inflation that this number is probably well over $700 billion. And on Connecticut coastline, we're the 7th highest of 18 Atlantic states. Value of insured coastal property comprised 64% of all insured property. Connecticut is 3rd only to Florida and New York. Trees. We love our trees, but it's an Achilles heel. Nearly 60% of Connecticut is forested, one of the most heavily forested states among most densely populated. And we see this when we hear companies using aerial imagery and concerned with tree limbs and trees around properties, because these are real risk, especially in wind events. Flooding, a steadily increasing factor. And when we looked at Irene and Sandy, Western Connecticut, and I can even go back to probably 2008 when we had the flooding in Mystic, historic flooding in Mystic. So flooding it's a growing risk, as several speakers have already indicated. Next slide. Here's some numbers for you if you're a numbers person. Connecticut has had 16 federal disaster declarations in the past 23 years. 12 have occurred since 2010. Over $380 million in federal assistance. This does not include COVID, which was much, very significant, which would bump that number up almost another $50+ million. Next slide, please. This was from a New York Times article within the last 2 months, I believe. And here again, you see a growing trend. And, I believe Kim spoke to this. It is, flooding is one of the fastest growing risks in our country. And flooding risk is growing, and people outside the FEMA designated floodplains need to take notice. We need to change this paradigm. These numbers are not acceptable. How do we change consumer attitude toward flood risk? Definition of insanity, doing the same thing over again, expecting a different outcome. We've got to change this paradigm. Education and increased awareness is very important in this endeavor. Next slide. I had a great learning just within the last 60 days and showing, where FEMA flood maps and Zillow is now using First Street in determining whether a risk is at peril of flooding. And it showed me the importance of needing to bring better information to consumers and agents and people that are engaged in providing insurance on flood. The right shows a property risk in the red. It's a condominium complex, and the horseshoe there are all condos there. And then at the top of the horseshoe, it branches out and there's some more condos there. Her daughter bought a condo in that circled area. When she bought it, mortgage company didn't require insurance because it's an X zone, according to the FEMA maps. But when her mom went online to get a quote, she went to the realtor.com to get some information on the condo, and there was information from Zillow and on this specific property using the First Street mapping. And here you can see that little blue dot right in the middle of that red area, or the dark blue area. This area is exposed to flooding. This is what happened up in Oxford. This is what we see happen along our coast in areas that are close to flooding. People think that they're immune and that they're not going to be flooded. And if it rains, you can flood, as you can see here. This is a risk that this person needs to know. And the numbers on the left in the slide show there's an 18% likelihood that this property will flood this year. In 15 years, there's a 96% chance. And within 30 years of this mortgage, there is almost 100% chance that this property will flood. So there's a lot that we need to do. Next slide. This is one of the things that is very important, and it's part of the legislation. Connecticut does not require a seller to disclose whether a home has previously flooded. At least 10 states have improved flood risk disclosure. Connecticut's on the right, we get a D in that category. 74% of people surveyed by the NDRC favor disclosure. Next slide. Next slide. Oh, the legislation. So what we're looking at, and I think everyone saw the governor's, or if you didn't, the governor, my commissioner, Deep commissioner, and others were, had a hearing to discuss, ideas around proposed legislation. One of the areas that's important is looking at how can mortgage companies be better at informing people at the time of purchase that they have a flood, that you could be flooded, and having more disclosure in that area. Insurance agents and brokers. We heard our agent friends community here talking about what they do in their community. And, there's thoughts about how can we, have the consumer in every part of the process be informed of their risk of flood, so they are making informed decisions. And then insurers, Hartford and Travelers, I think, are two companies that I'm aware of, because they're my domestic companies here in Connecticut, that do provide a clear notice on their policy when they issue it if you do not have flood insurance. Not all companies do that. Not all companies talk to you about flood insurance. There are companies out there that sell directly. I have one of those. That company has never come to me or talked to me about flood insurance. We've got to have more conversations with consumers so they understand the risk. After the flooding, we heard much confusion about what is and isn't covered. I never had a flood. I didn't know I needed flood insurance. Commissioner Mays, Governor Lamont, they want to address this issue. One of the things we want to do at the department is how can we bring the maps that I showed you to agents, to communities, so communities and agents can understand the risk, even though FEMA might say you're an X zone, but you do have risk and you need to consider flood insurance. Is there an ability at some point down the road to provide community flood insurance? So again, how do we look at this differently instead of the way we've always looked at it? And I think our next speaker is going to be talking about parametric insurance. So I think there are things out there that we can do to bring more awareness to the consumer. Thank you.
Mr. Bradner, thank you very much. So hopefully we have Alex Korb online. Alex is going to be speaking to us about parametric insurance. Alex? Alex, can you please unmute yourself?
That would be helpful, wouldn't it? Thank you very much. Good morning, everyone. Alex Korb coming to you from New Jersey. And special thanks to Representative Woods for giving me this opportunity. Spent 27 years in insurance, reinsurance, and financial services, and wanted to chat with you today about parametric insurance specifically, what it is and why I'm so optimistic about it, and also share a few points of feedback on what I've heard so far from the previous speakers. So in terms of financial resiliency, which is ultimately what insurance is all about, yes, it's a very important piece. Let's also not forget operational resiliency, which means what can you do before an event in terms of mitigation, resilience, and particularly to flood. There is a lot to talk about, which is probably we don't have time for, but I'll just mention two words for you to pique your interest. It's called amphibious architecture. This is a technology that is used in Europe and actually down south, which effectively flood-proofs vulnerable properties by making sure that when it floods, the building floats. So you can just imagine at the four corners of the rectangular buildings, the stilts, and there is a special flotation materials underneath the house. And when the flood happens, the house gently floats up and then comes down. But enough on that. Enough on operational resilience. That's for another day. Before I get into the parametric insurance, I wanted to comment on something that I've heard from several speakers before, and that is, how do you incentivize people to purchase coverage, assuming it's available, right? And that's a $64,000 question. And I just wanted to leave you with a few thoughts on that. One, there is a reason why insurance is sold and not bought. There is a reason why people waking up every morning not wanting to purchase insurance, but rather purchasing an iPhone or some other gadget. That reason has to do with psychology, that majority of people are not necessarily wired to contemplate the horrible things that can happen to them, to their property, or to their businesses. And therefore, that's where insurance mandate helps. However, there is a proven life hack, if you will, It's called embedded insurance. As the name might suggest, that's where insurance coverage becomes a feature, inalienable feature that you cannot opt out of otherwise of a different product and service that you buy. An example, flood insurance embedded in a mortgage. You cannot opt out of it, right? And by the way, you have a benefit of effectively spreading the premium over extended period of time. Flood insurance embedded into the costs of, let's say, agricultural inputs, feedstock, fertilizers, seeds, etc. This is very, very popular, has been for the last 15 years, predominantly outside the US for various reasons, but it's an established and proven hack how to raise awareness alongside the education, how to increase the societal resilience by providing effectively the invisible hand or the hidden nudge for folks to be protected in the event of the inevitable, even if they don't want to contemplate it on their own. Now, enough on that. Let's talk about insurance. We talked about, I wish we had a bit more time there, but I'll try to squeeze in key points and leave any questions for the Q&A. We talked about the existing options, NFIP, private market flood insurance. That's all wonderful. Now, it's worth keeping in mind that sort of purchasing insurance is an easy bit, right? I think somebody mentioned you can get a quote in 10 minutes and whatnot. And by the way, whatever I'm going to say, this is not a knock on the traditional insurance industry. I grew up in that industry. I'm very well aware of it. But this is just pointing out some facts, and so hopefully with a view to open up, people's minds and horizons to the alternatives, which, by the way, are increasingly popular and widespread around the world, including in the US, but not to an extent. So we should definitely take a page, but I'll give you a few examples. But we should take a page from our friends around the world. So even ignoring the fact that NFIP, it's wonderful coverage. Yes, I think somebody mentioned earlier that perhaps you can purchase smaller amount of coverage. You don't have to purchase 250K and whatnot, and that's wonderful. I would respectfully suggest that in the day and age of inflation and increases in labor costs and materials, I think that's probably the least of concerns for people. The concern is that the coverage is inadequate, in fact, and so people need more, not necessarily less. But yes, it is. It's an option. Now, one of the reasons why a lot of people and businesses are sort of allergic to the notion of insurance is not because it takes 10 minutes to purchase, but what comes at the end, right? The claims adjustment process, because that's where the real value of the insurance policy is. And there, of course, we all know that there are exceptions, sublimits, but most importantly, there is oftentimes a very extended claims adjudication period. And oftentimes it is contentious, and especially for businesses, yes, you might get some payout from the policy, but it could be in 6 months, it could be in 12 months, and you need immediate liquidity now to stay afloat. And by the time you get whatever it is you're getting, it's a bit too late. So, because you don't know with traditional insurance whether you're going to get paid, when you're going to get paid, and how much you're going to get paid, for many people, that's a bit of an uncertainty and tremendous uncertainty. And that's that's the issue. And by the way, this is how traditional insurance has been around since the times of the Lloyds of London. We're talking 400 years ago. This is not a history lesson, but fundamental principle of indemnity insurance is we insure your stuff, your physical stuff, and there needs to be a damage to that physical stuff. Okay? Let me give you some examples of where this paradigm falls short, right? 20, 30 years ago, that would have been fine when our economy was predominantly goods and physical asset based. Now, when we're talking about service-based economy, this is woefully inadequate and creates many coverage gaps, right? Probably some of you have heard bandied about in the media the notion of protection gap, right? That's the difference between the damages sustained versus the portion of it, usually very small, that is actually insured, right? So why is it happening? Let me give you an example. Asheville, North Carolina, from Hurricane Helene. I know firsthand some of my colleagues had to evacuate without having any physical damage to their properties, but the water treatment plant was knocked out, the schools were closed, so you have significant financial impact, but no physical damage to manifest, to show for. And so even if you are one of those folks, or if you're a business, right, and for whatever reason, your business escapes unscathed from flooding or any other disaster for that matter, but you have a significant financial impact, you're going to get exactly zero from a traditional insurance policy, flood, NFIP, or what have you, because you do not have a physical damage, because traditional insurance does not recognize the fact that the damages and adverse financial implications for people and businesses extend way beyond damage. It can include having to evacuate your family. It can include various other things, non-damage, what is called non-damage business interruption. And so that's where the parametric insurance solutions shine. Let me give you concrete examples when it comes to flood specifically, and then happy to address any other questions in the Q&A. So there are at least 5 different approaches where parametric insurance solutions for flood exist. Again, by definition, remember, it focuses on impact, which could be much, much larger than physical damage. Traditional insurance, whether NFIP or others, only covers you for physical damage. And again, let's not even go into the actual policy nuances that your contents, for example, will be covered at an actual cash value with an FIP versus maybe in some privately held policies, you will get replacement costs, etc. The stuff in your basements most likely will be excluded under NFIP, right? It might be covered under private policy. But anyways, there are lots of bells and whistles to worry. But fundamentally, again, remember in the disaster concept, whether that's Katrina, whether that's Hurricane Harvey in 2017 in Houston, etc., when you have, okay, Connecticut is a relatively smaller state, right? But when you have hundreds of thousands of claims and you need to have a claims adjuster visiting and adjudicating the loss, just somebody will have to be last in that queue, right? And so that's why there are this often bemoaned, months and sometimes years of adjustment and litigation, which parametric insurance nicely short circuits because think of it, parametric insurance as insurance without loss adjuster. And in case you're scratching your head and wondering how can how can insurance work without claims adjuster? Easy. Let me give you an example. The way it pays is because you pre-agree beforehand some external parameter based on which you can get paid. For example, it was mentioned repeatedly this morning about when it rains, it floods. Absolutely. Plenty of examples, from Hurricane Harvey in Houston, dumping nearly 60 inches of rain, from Hurricane Ida in New York, and many other examples there, right? So in that particular instance, you will have a policy that will reference, let's say, the closest national weather station. That will simply say, if for a given municipality or given zip code, what have you, there is a certain amount of rain falling in a short period of time, you're going to get paid a pre-agreed amount. No questions asked. No loss adjuster visit required, nothing. You get paid typically within days, rarely within weeks, sometimes within hours for flooding, right? So that's an example where an event like Hurricane Ida and whatnot happens. Let's say whether you're a business and whatnot, and you have a trigger in the policy, it's called trigger, basically the threshold after which the payment is automatically deposited into a bank account. And it will say, hey, you know what? I can handle 10 inches of rain maybe in 5 hours, but 12 inches in 3 hours, it's probably going to flood, right? My sewer system's going to get overflowing, et cetera, et cetera. So you set in consultation with obviously the insurance company and advisor, trusted advisor, you set an appropriate threshold, and then you get paid and you can use the money. Crucially, you get paid fast. It is very flexible. You don't need to rebuild, right? Somebody was talking about definition of insanity. Well, with NFIP, with all due respect, the definition of insanity is the so-called small percentage of repetitive loss properties where a house can get flooded 18 years or 18 times, and every single time they rebuilt in the same place, right? That's a definition of insanity, but that's for another day, right? So one of the 5 examples is rainfall-based flood parametric solutions where it is triggering and basically the proceeds are deployed very quickly. If you're a business, you really appreciate the fast liquidity you get, allows you to stay afloat, pay the bills, has nothing to do with physical damage. Another example is what is called flood sensors. Again, that's another popular solution. When I alluded to earlier that sometimes you can get paid within hours, this is not a dream, folks. This is reality. In the UK, there is this company that I think a couple of years ago, the way that particular type of parametric insurance works is, let's say, particularly if you're a business, but equally if you're a homeowner, you affix about a 2-foot-long stick to the doorway of your house or the warehouse and whatnot. That stick is internet connected. I'm sorry, not internet, satellite connected, right? Now, if it registers a certain inundation above a certain level, it automatically transfers information to satellite. It verifies that the money gets deposited in your bank account. In case of the UK, a couple of years ago, a major flood, one particular, several actually businesses that had this sensor-based parametric flood insurance got money deposited within 24 hours of the sensor registering a particular inundation threshold, which again could be calibrated specifically. I think the gentleman from the Independent Agents Association mentioned insurance. Fundamentally, it's not a one-size-fits-all, folks, right? It's everybody has different needs, etc. So it's all calibrated, right? So we covered 2 solutions so far: rainfall-based, based on the local, referencing the local weather station, sensor-based, attaching the physical satellite-connected device to your home. If you have facilities, homes, or businesses near the river, there are very well-established solutions based on the river gauge information. In fact, such solution for flooding right now is being discussed for a number of towns and cities along the Mississippi River, right? So that instead of referencing the weather station, you're actually referencing the river gauge as a good proxy for flooding, right? And again, the same type of benefits. You care about very fast, transparent, and flexible payout. Transparency is key, by the way. You don't need to tussle with the adjuster. Hey, you shortchanged me on this portion of my claim versus not. There's none of that. That's by definition. You take that contentiousness outside of the claims adjustment equation. And instead, everybody can look up what the river gauge shows on the web. Everybody can look up what the National Weather Stations captured in terms of the rainfall, right? So river gauge is a third example of how parametric flood solutions are structured for those businesses and homes in the vicinity of rivers, for example. Yet another example closer to you guys is the satellite-based flood solution. And there are, I'm pleased to say, from my recent employment, there is a live project right now happening in New York City. I believe one of the previous speakers mentioned how do you distribute, insurance, perhaps through a community-based solution. And that was spot on, because that particular example in New York is a prime example of what is called CBCI, which stands for Community-Based Catastrophe Insurance. So what New York has done in 2023, and then renewed that policy in 2024, is they took out parametric flood insurance in part driven by their experience with Hurricane Sandy over a decade ago. And in that particular case, they identified certain neighborhoods in Queens, Brooklyn, I think in the Bronx too, which were particularly vulnerable. They also had some additional considerations in terms of concentration of lower to middle income households. But fundamentally, there is a nonprofit organization in the mix there called Center for New York City Neighborhoods, took out parametric flood insurance policy, which in that particular case was underwritten by one of the world's largest reinsurance companies called Swiss Re, which basically pays that community organization over $1 million if designated zip codes are covered by floodwaters to a greater than a certain extent, right? So let's say more than 70% or whatever the number is of the surface area of zip code ABC is covered by floodwaters, which is detected in near real time by satellites. The city gets paid, and then they act as a middleman by distributing the proceeds of the prompt insurance payment to the at-risk vulnerable households, right? So instead of, from an insurance company perspective, instead of issuing, hundreds of policies for a nominal amount of $2,000 or $3,000 payments, which is impractical, right? They issue a single policy, a large policy to an go-between. It could be government-sponsored entity, it could be a nonprofit and whatnot, right? And that is the way to effectively facilitate and foster community resilience through this parametric insurance.
You're just about up at the end of your time. Thank you.
Thank you. I think I'll save the rest for Q&A, if any. Thank you so much.
Alex, thank you so much for that. And so we're going to go to our final speaker before we go to the Q&A, and that's Tom Glasick, who is the Executive Director of the Washington, D.C. Insurance Federation, and I think a self-prescribed longtime flood nerd.
Yeah.
Yep, there we go.
Yeah, you can use nerd. That's fine. And I'm following a whole panel of flood nerds, so that's great. It's also a challenge to have something different to say. One thing I do need to say that is different is, while I am the executive director of the District of Columbia Insurance Federation, so I'm the counterpart to Eric in DC, and I represent many insurance companies. None of what I'm saying today is the position of the DCIF. It doesn't represent any of the particular members. I'm just here because everyone knows me as a flood nerd. With that beginning, I'm lucky enough to get to kind of bat cleanup, but at the same time, there's so many things that have already been said that I don't want to repeat. The things that I had wanted to flag that are somewhat new to the world, and Don Griffin did a great job talking about the extent and the growth of the private flood insurance market. Those who've been watching this for a long time, or those who purchased a house 20 years ago, even 10 years ago, there was no such thing as a private flood insurance market. It is growing slowly, which is how we want insurance markets to grow. We don't want insurance markets to grow quickly, and it will always only be a complement to the National Flood Insurance Program, at least for the remainder of my career. We're not going to see the private market take over, nor are we going to see a circumstance where people are worried that their flood insurance claims might not be satisfied. Not that there's any question that the private market wouldn't satisfy claims, but most people are going to continue to get their coverage to the National Flood Insurance Program. Things that I would note for your coastal communities, it's always worth talking to your independent agent to talk about the private flood option versus the NFIP. There are circumstances where it can either be price comparable if you're in a really high risk area, and the coverage availability can be different for private flood. I know Alex mentioned and other people mentioned, like right now, basement is not covered through the National Flood Insurance Program. A lot of people find that to be surprising when we're adjusting. A lot of private flood insurers can include basement or able to include basement. They're also, let's be honest, we're on the East Coast of the United States. I live here too. $250,000 worth of coverage is not necessarily enough for a good many of our properties. So private flood does offer the opportunity of just getting one policy of 500,000 or larger than that. Right now, what happens is people go and they get the National Flood Insurance policy, and then as Don mentioned, there are excess private flood policies. I'm pointing as though Don's actually there. He's not. So those are the things to flag about private flood. This is totally outside of my scope, but I know, and I didn't even get to talk to George about it earlier. A couple of years ago, an entity called the National Conference of Insurance Legislators, wow, that's a mouthful, created a private flood model that some states have looked to, mostly in the Southeast, but that facilitates the growth of a private flood market. I don't want to step on Eric's toes, so I will let the Connecticut Insurance Association decide whether or not that's something that they want to advocate, but I did want to get that on the table. One thing that has had some mention, but not as much, and I'm from a jurisdiction where there's a lot more, there's a higher percentage of rentals. It gets lost in the conversation too often. I bug building owners to make sure that all of their renters know that they can get contents flood insurance, and that's both available from the National Flood Insurance Program as well as through private flood insurers. And it's, we were all kids once. People didn't used to get renters insurance. When you finally found out how cheap it was, you're like, why didn't I have that sooner? I push it a lot in DC, and I think in your urban areas, some of the condos that making sure that renters understand that is an option, even though the building they may live in may have an industrial policy or commercial policy. If all of your belongings in that building are flooded because you're on the first or second floor, it's going to substantially impact your recovery from the event, even if the physical property is insured. I get the luxury of listening to everyone else and having one or two comments, not critical at all, but just I think Kim made a really good point, and then George highlighted it. We have a National Flood Insurance Program. It was started in 1968. We're modernizing the government is modernizing the policies, but it's still a little clunky. It's kind of like a 1978 Camaro. Cool, but not what you want to be driving today. So what? Okay. Well, okay. It's my dad's 1978 Cutlass, which rusted out a long time ago. It is a functional flood insurance program, but this strange dichotomy the federal government has created where you're either required or not required. And as Kim pointed out and George pointed out, those lines on the map, water doesn't know that they're there. So you can have people across the street from each other who have substantially different NFIP zone ratings, that, let's be honest, that water's not going to stop on that street. So it's something that I'm glad that both George and Kim pointed out, but I don't think a lot of people understand it. They're buying a home. Do I have to have flood insurance as a conversation? I struggle in DC on the federal level all the time with members of Congress. I don't want my constituents to have flood insurance. I'm like, do you want them not to have flood insurance? But it's unfortunately, it's something we just inherited from the 1960s, 1970s outlook on this. But it's something when you're talking to your constituents, and I'll will end with, well, no, I want one more, but I will end with, there's not an elected official I've spoken to in the last 15 years that I don't ask them when they're speaking to their constituents, speaking in groups, either do the how many people in the room have flood insurance and see how many hands go up, and making that plug from your vantage point and getting people thinking about it. My Uber driver over here today asked me, do I have flood insurance? So we walked through how to get it. But I mean, you have much more access to the people of Connecticut, and I bug even Maxine Waters, who, to take a heavy interest in this. Every time I talk to her, I'm like, you do remind everyone in California they should have flood insurance. And she's like, okay, but earthquake, other things. But so that's one thing I do. And I have to come to the defense of my write your own friends. And I agree with Alex. There's really neat stuff going on in parametrics, but the claim response time, there were some issues after Sandy, but the NFIP program, well over 95% of claims, I'm looking at Kim Dazad, well over 95% of claims are settled and handled within 90 days. So it's not, I mean, you have to file the claim. You've got a whole year to file the claim. So if you don't get your claim filed, it's a different thing. And after major events and all went down the Eastern Seaboard, even though they do not regulate the National Flood Insurance Program, all of our state insurance commissioners from Florida all the way up to Maine have reporting requirements after a major event for claims closing. And, so it's not, I'm not saying Alex is wrong, and I'm sure in large commercial disputes, but by and large, if you're a residential property and you're flooded and you have cover, first off, you're happier than all your neighbors who didn't have coverage, and you have a payment from National Flood Insurance Program or your private insurer within 90 days, sometimes quite sooner than that. With that, I'm much more a Q&A person than a speak extemporaneously, so I will yield back whatever time I have left and happy to answer your questions.
Well, thank you very much, Tom. And so I just wanted to thank everybody on behalf of everybody. Thank you for allowing us this opportunity to speak to you. And every one of us is here now available for any questions that you might have. But thank you.
And if anyone has questions, please raise your hand. If you're online, you can raise your hand. I'd like to invite people from the crowd. If you'd like to join us around the table, please do so. And I see Representative Raheb Ali Brennan.
Thank you, Madam Chair. In college, I studied Hurricane Katrina, and how it was more much of a federal disaster, a man-made one, than it was a natural one. And so I think I've got New Orleans on my mind right now. And so, after Hurricane Katrina, New Orleans had implemented major flood mitigation infrastructure, such as levees and pump systems, to reduce flood risk and stabilize insurance costs. I guess my question, I know, and I appreciate Mr. Bradner for providing us with some specific points for legislation. But I guess my specific question is about what kind of mitigation strategies, and this could be a dual committee question, but what specific mitigation strategies, such as like updated flood maps, stronger building codes, or resilience investments, should we consider in Connecticut to help lower insurance premiums and ensure long-term affordability for homeowners? So, thank you.
George?
I'll start out, and I'll talk more toward the wind element of resiliency, because I should have kept the slide on my deck. I took it off because I wasn't going to talk about resiliency, but I can tell you right now that Commissioner Mays has a council that he's put together with consumer reps, builders, trade organization, industry, higher education. And we're looking at seeing how we might be able to create a wind resiliency program following the IBHS, Institute for Business and Home Safety. I have to keep away from my acronyms, for fortification of homes to help make them stronger to withstand wind, whether convective storm or hurricane, because it is proven to make properties more resilient. The University of Alabama is doing some studies on, losses from, I think, Hurricane Irene in Alabama, and they have found substantial reduction in loss when a home is fortified, the roof or the complete structure. And the most important thing is protecting the roof. So we're looking at, in Alabama started the program, they have about 50,000 homes that are now participating in a grant program where they are provided up to $10,000 to fortify their home. And, so we're looking at what's happening around the country. There's at least 8 to 10 states that already have a grant program in place. There's probably another dozen states that are looking at, like Connecticut, what can we do? Because you've hit the nail on the head. We have to, as I said, we have to change the paradigm. We have to get people to stop thinking about, I want to renovate my kitchen and update with marble countertops and custom cabinetry. We need to get them to start thinking about their property risk. Trees that are right next to their home, branches that are overhanging their house. I'm close enough to water. I need to be thinking about my risk and what can I do to minimize it? And then we want to provide the tools to help them do it. And to me, one of the key components that we have to think about, it's a community effort. It's not, Tom talked about that one homeowner that's really happy after that flood loss. He is and he isn't, because that community is destroyed. That community is, many of the people have huge loss, because the average flood loss is 52,000, 78 based on Irene, the information up there. But up until what numbers I had is the average flood loss is $54,000. And then you have loss of living expenses. You have a ton of expenses that consumers are picking up. And we need to make this a community effort, because 25% of small businesses never recover after a disaster. So we have to make this a community effort and help communities help people understand what the risk is. If there's a parametric option for a community to purchase to protect their residents, we need to do it. We need to figure out how to do this differently.
Thank you, Madam Chair.
Thank you. Senator Wong.
Thank you very much, Madam Chair, and thank you all for being here today and sharing your expertise and insight. And I apologize as I was in other leadership meetings and might have missed some of the points that I may ask, so indulge me. But I think the first thing I wanted to ask is, we're having this meeting, it's important. We've seen the devastating effect from the August storms. But George, as you laid out, it's not just that storm. It has been a combination, and we have short memories. But unfortunately for those businesses and individuals that have lived through that, they are still dealing with the challenge. So obviously I want to compliment Governor Lamont, who announced as one of his legislative proposals, and I don't know if you addressed it, to kind of strengthen, resiliency against extreme weather. Now, is there any suggestions from the experts in the arena, which will have a huge factor without adding additional cost to the consumer product? What solutions do you have as the governor's drafting and this committee of Cognizance reviewed this process, supplemented with the information you give us and expertise continually? What suggestions do all of you have? And Tom, I don't think you're the only, storm weather flood nerd. We all are nowadays, because when you see the devastation that occurred in Oxford, Newtown, and Monroe and South Perry, it is just catastrophic. You see the overwhelming devastation and power of nature for communities that have never imagined that kind of impact. When you talk about the average rainfall in June of Oxford and Newtown to be 3.2 inches for the entire month, we had 14 to 16 inches of rain come down in literally a 3 to 4 hour span. I don't care what kind of infrastructure you have designed, it is not capable of handling that. So my question is, what suggestions you have? Two critical questions is, how do you offer suggestions to property owners and businesses? And number two, it is incredible to me that there were no flood insurance available at all to any of those businesses and individuals. And I think that is one of the critical things that we're looking to do. And I know the governor's proposal, and would love to get your input on it. Sorry for the long question. Thank you, Madam Chair.
Thank you. And if you just want to raise your hand and speak up.
Senator Wong, thank you so much for that question. I hear what you're saying. The one thing I will just deviate from what you said is there is flood insurance available. And that is one of the, I think, the most important message from this entire exercise of 2 hours of talking about flood insurance and what it is. The problem is not availability. The problem is purchasing. We have a consumer base that doesn't necessarily understand the risks inherent with business ownership and home ownership and just owning any type of property. We have a consumer base that looks, as we all see, costs going up, looking for avenues to reduce the amount they pay each month. Where you have flood insurance required is when you have a federally backed mortgage. But we have seen individuals, once they pay off that note, they no longer purchase flood insurance. Now, they know that their property is in a floodplain, and they're making the elective decision to take on that risk and not pay the premiums for the flood. I think if anything can be taken away from this, is that it's been said, I think 5 times, where it rains, it can flood. You just said in an area of Connecticut where the average rainfall for a month is 3 inches plus, they experienced over a foot of rain. That can happen anywhere. And if it happens, as you just said, it doesn't matter what you've built around you to try and mitigate that. You need to have the protection in place, and the protection is available. So the question is, how do we convince the consumer base to purchase that protection? I think knowledge is the number one way to get there. And as the private market has grown, and more people purchase flood insurance, we should see, by the laws of supply and demand, the premiums for this to even get more attractive.
I appreciate that. And you're right. It is available. But what I heard from many of the businesses and residents impacted was it was not offered as a conversation piece. And I don't know if in the consideration, do we legislate a disclosure to that effect? I see one of the proposals mentioned was a property disclosure if a various property has been flooded. That is helpful. But nevertheless, I think it may be a provision to offer that insurance. You're right. It's available in the marketplace, but I can buy flood insurance if I'm in Arizona on the high desert. It's available. I'm not going to buy it. Hopefully I won't ever need it. But here's the thought though. My second question to that follow-up is when there is disclosure in the premiums and the product purchase that flood insurance is available. You said the magic word, increase volume will reduce cost. Would, in your professional opinion and all the experts here, would it become prohibitively expensive on an actuarial and cost analysis for people to purchase that? For example, if in Oxford and Newtown and Southbury, they say, I'm a business, I'm back to whole barely, that I want to purchase insurance. Are you looking at possibly a 20% premium to these people? Like with the guidelines and the subsidies of the FEMA flood insurance programs? On a market basis, if you're offering that and people want to buy it, are you anticipating from your expertise a potential 3%, 5%, 10%, or 20% increase that makes it prohibitively expensive and unaffordable?
I see Don's hand up, and I just want to, in the interest of time, because we have a lot of participants here, if we could ask one question and move on to try to get to everyone in the room. Thank you. Don, your hand is up.
Thank you. I appreciate that very, very much. First of all, to go back to one of the ways that you can to mitigate this, as we heard it mentioned earlier by Tom and others, is the Institute for Business and Home Safety has standards to try and reduce costs. Many of them are fairly inexpensive, particularly when it comes to flooding. A lot of them are even more inexpensive when it comes to wildfires, which we wish some of the people in Southern California would have done. Having said that, when you talk about if more people buy it, is it going to be at a certain percentage? That depends on the risk. If we do this properly, the risk is spread worldwide. The risk is spread amongst all those in Connecticut and around the country, and it hopefully keeps the price lower. The problem right now is there's not enough people buy it, and there's a cost involved. Another way, so whether you look at it from a parametric basis or a traditional insurance basis, you need more people to buy it. That's the way our industry works, even on a parametric basis. That's the way you're going to get it spread around. So those are things that need to happen. The key, I think, and I'll defer to Butch because I know he's on here. One of the things I think we heard about is, people didn't know it. There wasn't conversation about it. I think there's a requirement. I thought that FEMA provide, or if you can ask, that if there has been a flood loss on that property, and it was ever insured for flood insurance, then there's the ability to get what that flood loss was back in time. But I'm not entirely certain of that, but I thought there was. So I'll stop there.
Don, that crosses the line with the Federal Privacy Act, and federal government payouts are covered by the Federal Privacy Act. Yeah, there are state regulations. Texas, for example, has one that we can do a little more research on. And I think somebody mentioned NCOIL earlier. NCOIL's got volumes of information about what each states do. As far as flood loss disclosures, but that is truly a state by state thing. We don't require it, and like I say, the Federal Privacy Act does cover some of those things. But the one thing that I would mention, just to the prior senator's comments, one thing we've seen some states do, and we certainly see some agents do, is proactively communicate that flood insurance is not covered in your homeowner's insurance policy, if you should buy it, and then they will actually they will have their customer sign a rejection form. That covers the agent's errors and omissions exposure. And it's kind of an artful way, because in number one, it covers them from an exposure standpoint, but at the same time, it also communicates quite clearly that, and maybe somebody from one of the agents associations wants to speak to this a little bit on how common it is in Connecticut. But that's something that we produce. We have little stickers available that agents can slap on a homeowner's policy. What we would like to see truly is that every homeowner's insurance quote comes along with a flood insurance quote. That we've developed a much easier tool for doing that. There was when I first started at FEMA, there was an extraordinarily arduous process, which took forever for an agent to quote. Now we can write you a quote in about 6 or 7 minutes. And so we would love to see more and more states require an automatic insurance quote, or at least an acknowledgement that the customer has heard about flood insurance and is denied coverage.
John.
Thank you, Representative Wood. Let me introduce myself. My name is David Galito. To my right is Joanne Green. We're both past presidents of Connecticut Realtors. We both sit on our legislative committee, work with a number of partners we see here in the room on a regular basis. Joanne's our chair. And I'd like to thank all of you, and including Mr. George, for allowing us to participate in this informational forum. And hopefully we could shed some light on what we see on the ground level, working with the residents of the state of Connecticut when they're purchasing a home, and all the nuances that go along with it, naming flood insurance and homeowners insurance as a part of that. I'll defer to some comments that Joanne would like to make, and hopefully shed some light on some things. Thank you.
Thank you, David, and thank you everyone for this very informational forum. So being out in the field in real estate, it was already mentioned by Mr. Bradner. We do need to have more disclosure, I think, on whether or not their home has had flooding. Our residential property disclosure right now asks, are you in a flood zone? And then it asks, have you had any water damage or any seepage in your basement? But there is no question that directly asks, have you ever had a flood claim? So Connecticut Realtors would very much like to work on getting that added in, and we would be supportive of that because that's an important informative piece for buyers to have. I'm sort of the poster child for flood insurance. I live in Old Saybrook. I just built a FEMA compliant home 3 years ago. What was there on that property before was a tiny little cottage, less than 800 square feet. And at one point, my flood insurance was, the last quote that I ran away screaming from was $4,400 a year. With the NFIP, we were able to get a private insurer for half that. Then we built a FEMA compliant home that is more than twice the size of the original. And I think I'm paying $2,200 now for my flood insurance, and I have a pretty high policy. We wanted to get a big policy. So I have a couple of questions, comments and questions. You can imagine that a buyer in this environment with 7% interest rates, the cost of homeowners insurance going up, everything that's been mentioned, now they're facing flood insurance as an add-on. So if it's optional, in a practical, honest answer, nobody's going to opt to pay $200-300 more a month for flood insurance. And the other thing that I've experienced with flood insurance is very drastic increases from year to year. So it isn't just the entry level costs that a buyer's saying, you can show them what it's going to cost this year, but they really have to anticipate pretty significant increases from year to year. I know we experienced that certainly with our beach property. So I guess I have a question too. What is the typical cost of flood insurance, let's say on a 1,200 square foot home? I'm in an AE zone, so I know that, it's going to be higher there, but let's say it's not even let's say it's in a B or a C zone. What is the typical cost of that? And what could they anticipate as a percentage of increase over time, year to year, just to get an idea?
Sure, and I know I don't have a name tag, but name's Jason Guerrero. I'm from USI Insurance Services. We're an independent national broker. To answer your question, the average cost of a flood insurance policy, and again, this is assuming the max $250,000 for a house not in a high hazard flood zone, is between $600 to $700 a year. I echo your comments that when every single client that we work with, we're talking about flood. And most just simply make the educated decision not to purchase it. But the other part of your question too is FEMA has, and one of the other flood nerds can correct me if I'm incorrect, but I believe the NFIP program statutorily caps the annual rate increase to 18%. Where is that? Okay, so that is the highest increase from year to year that you could see. But I believe there's exceptions to that. There's been prior flood losses, but I believe the statutory cap is 18% a year. But still on $600 a year, that can compound pretty quickly. So
I can, thank you.
Just if I could add to that though, one of the things that happening is, NFIP introduced risk rate 2.0. So it's creating more of a fairness in how people are rated. In the past, a small home, 800 square feet, that person could pay as much per dollar on that $800 per square foot as a person with a 2,500 square foot home. So from an actuarial perspective, risk rate 2.0 brings more parity back into it. There's also some stuff, and I'll let NFIP talk to this a little bit more about, rates have to get to where they're actuarial sound. So you're going to see a rate increase on some properties of over a period of time. It's capped at 18%, but that could go on for several years until you get to the actuarial number that they feel is necessary for that risk.
I did have one other question, if I could just take just a minute or two for this. When a home becomes, because I run into this a lot selling property on the shoreline, people buy property and their plan is to then elevate it and make it FEMA compliant. How does that impact the cost of the flood insurance once they become? So if you buy a FEMA compliant property versus, let's say they're the same size home, one's FEMA compliant, one is not, they're in the same flood zone. Does anyone have an idea of what percentage? I would think the flood insurance should decrease dramatically being FEMA compliant, or does it?
One thing I would recommend, and you would, Representative Brennan asked about tools, about mitigation, speaks to that as well. One of the things that those clients should be doing is getting a flood elevation certificate. So if they do make any change to a property, or if a homeowner is just curious about what their true flood risk is, that is a tool that anyone can go out and have a flood elevation certificate done, submit it to FEMA, and then that could impact and help with rates as well. And actually, even if the results of the flood elevation certificate are unfavorable, the NFIP program does not punish you. So you cannot get a worse rate for submitting an elevation certificate. It can only help you.
Good to know. Thank you.
Can I follow up just for a moment?
We have Diane, and then I'm going to go to Alex, followed by Butch.
Sure. I speak to a lot of those homeowners every day too, almost every day. That's me, very boots on the ground. I would definitely do that. So usually when you're going up in the air, your price is going to come down. But as you saw in your own example, you were paying about the same, you said? Okay. So George mentioned it a few years ago. The FEMA changed their rating structure. So now they have something called risk rating 2.0, where they used to have just a few rating parameters. The flood, what they call the base flood elevation, the predicted 100-year flood, the lowest floor of your house. Now they're looking at a whole slew of other rating factors, as George said, to make it more actuarial, to make it more fair per property. And one of the big ones that they've added into the mix is something called distance to water. Right? So that's you. So if you're right on top of the sound and you've elevated your house, it's going to go down, but you're still going to factor in the fact that you are very, now again, what that distance is and all that, we're not sure what that really means, but they're factoring a lot more things into that premium rate. And as George also said, FEMA's trying to, because they've had a deficit for a number of years from various storm events, they've had to borrow from the Treasury and they have to pay that back. There is a cap, 18% per year, but they're also looking at what they call per property a glide path, meaning your path to a real actuarial risk rate for your particular house. And that could vary person to person, but it's there. So they're trying to act more like, and in other words, the old method had a very subsidized, to some degree, what they called rate. It was trying to not penalize older homes that were not built compliant. So think of the house you used to have sitting on the ground, right? They're getting away from that model, and slowly over time, again, that glide path to make every house to pay what is like their fair actuarial rate. But George was correct. They're now factoring in the size of the house. So a mansion is paying more than a little tiny house. That, the one near the water, unfortunately yours is probably paying more than the one up the street from you, that kind of thing. But again, the elevation certificate is great. What I would tell, and I've told this many times to homeowners, get the elevation certificate for the house you have right now. Have your contractor, engineer, whoever, mark that new number, what that's going to be on that proposed house. Take that to your agent. All the agent does is they take those figures off the elevation certificate, right? Plug it into a system, box 1, box 2, box 3, whatever the heck it is, and it spits out a premium. And it doesn't matter what agent you use. It's not like auto where you could shop around. It's all federally set. You can go to any agent. It's all the same number. But take the design you're thinking of, and then replug it into the system and compare what you have now to what you think you're going to build. And that's a good way to do it. It gives you like a quote based on what you think your design is going to be.
Thank you.
Okay.
Thank you, Diane. Alex?
Thank you very much. Just 2 comments on the question from the person in the real estate industry. Folks, let's remember, insurance is a vital price signal. It tells you what the risk is. If we had a truly correct price signal, unencumbered by regulatory interventions or price caps, we would be in a very different situations, right? So let's remember that. So even with 18% on the federal level price caps, look no further than Southern California right now. Okay, this is a poster child of what good intentions, trying to protect consumers against rate rises, insurance premium rises. This is what it does. If companies do not have the right view of risk and they cannot charge for it, they will withdraw and you will end up with a much bigger problem. So respectfully, price caps, even 18%, you want to have the rates need to double or triple. Yes, it's going to be a rude awakening, but it will tell you people that, you know what, maybe I should not be purchasing that house for X on the shore. Maybe I should purchasing it at 30% discount to account for the true cost of risk. So That would be my strong preference. Caps, any regulatory interventions, please do away with that if you really want to have a sustainable future, because the price signal is a vital piece. And then secondly, sort of the other question was, I believe, whether could be some type of assurance that the premium will not rise by, X next year or 3 years ago. Folks, just like nobody can give you an assurance what the price of X will be in 12 months, insurance in particular, there's been mention of actuarial rates, et cetera, right? Yes, I was trained as an actuary early on in my career. The actuarial technique of looking in the past history, looking in the rearview mirror, sadly, no longer applies in many lines of business, not least due to the climate change, et cetera. Just because the rainfall pattern and other patterns that were prevalent and fairly stable or variable within a certain bounds over the last 50 years no longer hold, right? Due to the climate change. This is not a political statement. This is just a fact that we're seeing an increased frequency and severity of events. And therefore, to the question of, can somebody give you an assurance that your insurance for X next year is not going to rise by whatever, some exorbitant amount? I don't think anybody can give you that assurance. But if you subscribe to the fact that it's a price signal that should reflect and impact people's behavior, where to build, where not to build, where to live, etc., then it is just like price of any other goods in a free economy.
Thank you. Do you all mind if we go to 12:15 and we do a hard stop then? All right, thank you. Senator Cabrera.
Thank you very much, Representative Wood. Thank you all for being here. And thank you for a very enlightening conversation. One thing I've learned today is I'm going to go home and check out my mortgage documents, because I truly do not remember. It's been too long. So that's one good thing that's come out of that. I have a question about, and there's been some conversation today about some of the impact of natural disasters have on rate policyholders. And I know there's lots of events happening right now. There's in California, and we had a situation in Connecticut in August. What are you seeing, and what kind of impact? What's the trend line look like? I know we've had a lot of conversation about education and making people aware that flood insurance is necessary and they should be purchasing it. I'm wondering what you're seeing in terms of the underwriting.
Well, thank you, Senator Cabrera. If you're referencing what are we seeing in Connecticut regarding the natural disasters that are occurring across the nation, is we're not. Because the natural disasters that are occurring across the nation are not allowed to be taken into account in the underwriting in Connecticut. But I can't speak to what California and what the carriers in California are experiencing in terms of their underwriting. I'm sure that it is extremely significant. And I'm sure the same thing is in Appalachia, where Hurricane Helene went through. And I'm sure the same is in Florida. But I really like the question, because I think it's so important for people to realize that Connecticut premiums are based upon Connecticut risk. And we all are fortunate enough. It sounds like I'm being a sycophant here, and I guess I am. We're fortunate enough to have the Department of Insurance that we do in this state, because they do balance their responsibilities of maintaining a strong market and liquid and vibrant competitors in that market, as well as their prime function of being a consumer protection agency. So Connecticut, I think, is fortunate. We're fortunate for a lot of reasons. We've got a barrier reef called Long Island. That's great when hurricanes come up. We have the sediment, or the geology of Connecticut, and our base is not as susceptible to hurricanes, as has been pointed out. We have some concerns with the excessive tree canopy in Connecticut. I can't agree more on that. This is I live in a highly wooded area, and over the course of years, not that I don't like trees, I love trees. I've taken down so many 100-foot oaks in my near my house because they posed a threat. And over the years, trees that didn't pose a threat before and then pose a threat to your property. And so it's incumbent upon me as a responsible property owner to take those trees down. I'm also somebody who paid for his own new roof. I did not. I went and I bought a new roof to the new building standards with the taping, and much of that wasn't because I saw problems. I mean, yes, there was discoloration. Yes, there was mold growth. That wasn't indicative of a roof that was going to fail, but it was time. It was time. I knew when the original roof was put on, and I knew that with the new standards, things like ice dams were less of a concern for me. We all remember in the early 2010s when we had storm after storm after storm dumping feet of snow that landed on your roof. And if you didn't get it off with your roof rake, it melted down, created a 9 to 10 inch ice dam, and people were seeing water go back into their houses because the water had nowhere to go. And with the new roofing standards and the new building standards, that risk is less. So Connecticut is fortunate is going to be the point that I wanted to leave.
Thank you very much. George, did you want to add something?
Yeah, and if I would, the only thing I would add, you talk about what, from an underwriting perspective would have changed. Eric touched on it a little bit. Companies are looking closely at their books of business. They're looking at, how old are the roofs on your house? If you have a 15, 20-year-old roof, it's time to think about replacing it. As Eric said, I just replaced my roof this summer. I did it based on IBHS standards that I'm aware of. And in Connecticut, it is within building code that if a person puts on a new roof, they have to do the roof taping that Eric suggested. But unfortunately, sometimes I run and I go out on runs, I see new roofs going on. It's, validating that people and contractors are doing that. Roofers today, I could go out tomorrow and get a license to do roofing and put a shingle on my car and start roofing. And, so we need to make sure there's an education process that roofers understand what the requirements are. But companies are changing their underwriting position. They don't want to be paying, if they can avoid loss about someone's got branches hanging over their roof, they're going to be asking that individual to remove those branches. And if they don't, they're going to probably non-renew the risk. Some smaller companies are facing pressures from reinsurers. So they're having to increase their rates in the marketplace because insurance is much more expensive for them. Reinsurance is much more expensive for them versus your larger carriers that have much more surplus and capability. But construction costs are changing, labor costs are changing. Inflation has come down, but that not as much from when you look at the building trades, not as much in that area. So those costs, when there are claims, are making their way into rates.
Thank you so much. It's been an incredibly enlightening conversation. I've learned a lot today, so I really appreciate you. Thank you, Madam Chair.
If I could just add one topic, Representative. My name is Graham Stevens. I'm with the Department of Energy and Environmental Protection. And one item I just wanted to bring up is looking at this in a more holistic community based manner as well. I mean, I think the state is taking actions now and needs to continue taking actions to make communities more resilient. And that can be to flooding, that can be to wildfire, that could be to heat. And it's going to be important, that we work across, all of the departments in government here in the state of Connecticut to ensure that we can provide that to communities. We want to indicate to insurers that the state is serious about protecting our communities so that they know that we're doing the right things to ensure that on a community-wide basis, folks are protected. Right? Many people do not know that the department manages over 20 flood control systems across the state of Connecticut that eliminate the need for, high levels of cost with respect to flood insurance. Right? So these are flood control systems we operate that were constructed by the federal government, either the U.S. Army Corps of Engineers or the USDA's NRCS. And that is a benefit to communities. Not everyone knows what those are or what the value of them are. I think we need to do a better job explaining that. I think we also need to do a better job explaining on an individual and community basis what the potential, risks and hazards are. We have a hazard mitigation plan. How much are we as a state explaining to people what the risks are within their community? So, I know that this is really about insurance and a lot of discussion has been about individual property owners, but also just wanted to add the topic about, community resilience and just point to the fact that we are doing more in that space than we've ever done before. Last week, the department released a RFP whereby we are seeking municipalities who are interested in applying for FEMA BRIC, which is a very large a community resilience grant program that's run by the federal government. We're going to provide an opportunity to pay for a portion of that non-federal cost share if those projects are successful in receiving federal money. So we really want to, maximize opportunities for communities to become more resilient and work to educate folks on what those risks are. So I'm really appreciative of this meeting getting put together. And thank you to Diane, who is our expert on these matters, sharing some time with you today.
Thank you, Graham. We have one last hand up for Butch, and then we will end. Butch?
Hey, thank you. I appreciate it. It didn't take me long to turn around to my bookshelf behind me and pull one of my favorite books, and everybody remembers the George Clooney movie of The Perfect Storm. But then I also found this book called The Great Hurricane in 1938. You can tell I have kind of a weird library behind me. The base flood elevation government sets is for a basic level of flood, not for the perfect storm, not for the hurricane of 38. And I think that's one of the things that we need to remember is if we say the base flood elevation is 4 feet for a given property, that means for a typical flood, not a catastrophic, anomalous kind of flood like some of these other storms I just mentioned. What we do see communities doing and what the state could consider is a statewide what's called freeboard. Freeboard adds an additional foot onto the base flood elevation. So you might have a base flood elevation of 4 foot. The building would have to start at 5 foot, for example. And you'll see this in communities, coastal communities, where you see buildings more elevated. That is something that the state could consider. What is important to understand is that the maps that FEMA puts out with these base flood elevations on them, this is a requirement called the mandatory purchase requirement if you've got a federally backed mortgage. The reason this was developed in the first place was after Hurricane Agnes to protect the federal government's investment, their mortgage, their back mortgage in your home in these given areas. It is not necessarily to protect you, it was protect the government's investment because after Hurricane Agnes, we had an awful lot of losses where people just got up and walked away. And the FDIC and those other federal insurers were left holding the bag. And so we developed mandatory purchase to try to protect the government's investment in that property. So when we say have to have insurance, that's what it actually means. It doesn't mean you shouldn't have insurance. It just means you're not required to protect your mortgage. And so that's one of the key things that I think is important to understand. And certainly when we have the conversations, you may not have to have that insurance, but we absolutely recommend you do have that insurance. And I just like when you go back home to your constituents, talk to them a little bit about this and tell them that even if you're not required, doesn't mean it's not a good idea.
Great. Senator Cabrera and I are so thankful for your time and energy. I know a lot of people traveled here and came in person to participate. I want to thank Eric George for doing a lot of the legwork of organizing everyone. And we will be around after to discuss. And I think this has given us a lot to think about, but it also means we have a lot of work to do this legislative session. So we will be working on taking a lot of your comments and implementing that into legislation. Thank you very much. Thanks, everyone.